Is credit card stacking right for your business? Well, we're going to talk about that right now during today's training. We're going to dive in and dissect what credit card stacking is, how it really works. We're going to talk about the pros, the cons. Is it real? Is it a scam? Should you be paying another company? Should you be doing it on your own? There's so many things to know about what I think is one of the most viable and potentially best financial options that you can have, depending on where your scenario is. But credit card stacking works in some cases. Other cases, it really doesn't work. There's a lot of things you have to know to really decipher whether this is a viable funding program for your business and your needs and your goals and what you're trying to accomplish. And by the end of this training, you're going to know all that. You're going to clearly understand what it is, how it works, and you're going to know the goods, the bads, the ugly, everything else in between. And you're most importantly going to know when it may work for you and when it may not work for you, so you can see if this kind of funding program is exactly what you need to get the money that you need to grow your business. So we got a lot to cover. Let's dive in. So first of all, what are we talking about when we talk about credit card stacking? So credit card stacking is basically a form of funding where you're getting multiple different credit cards at one point in time. Now, here's why it is a thing. It's a thing because if you try to go out and apply for multiple credit cards at the same time on your own, let's say I go to Chase, I go to Bank of America, I go to Regions, I go to Wells Fargo. And let's say, today I apply for two, and then tomorrow two, and then another one. What's going to happen is by the time I get to usually the second or third application, I'm either going to get denied or get way less funding than I would have gotten if I wouldn't have applied for the other sources. Now, this is happening for a couple different reasons. First of all, when I'm applying for the Chase, the Bank of America, the Wells Fargo, those inquiries are showing on my credit report. And the second thing that happens is there's a third party called the Small Business Financial Exchange, the SBFE. Now, the SBFE is a third-party data aggregator. They're gathering data, and it's owned by banks. And the participating members are all banks. They're like every one of the largest credit card issuers and banks in this country is part of the SBFE. And the SBFE has an arrangement where it's called a get to give. So their whole philosophy is you have to give us all of your information to get all of the information from the other banks. So for example, if you apply for a business credit card today with Wells Fargo, what you probably don't know is that Wells Fargo takes all that data and inputs it into the SBFE. Now, Bank of America knows that you applied for Wells Fargo. As a matter of fact, Bank of America even knows what you put on your application for Wells Fargo. Now, this gets us into all kinds of trouble that you probably don't even recognize is coming from this thing. But what happens is now all of a sudden, Bank of America sees you applied for Wells Fargo, right? Then if you go apply for a credit card at Bank of America, Wells Fargo sees that. So now the banks are seeing you're applying for multiple places at the same time. And they also see the information that you're putting on each's application. So if you're coming in and saying that your income's $300K at Wells Fargo, then you go to Bank of America and say it's $325K, well, you got a problem because what you don't know is that these two banks are communicating and they know what you're putting on each of the applications. So because of these inquiries and because of the SBFE, what happens is it's very difficult for us to go apply and get 3, 4, 5, 6, 7, 8 plus credit cards at the exact same time, or even if we spread it out over a matter of days. Because the minute we're applying, it goes into SBFE, inquiries are created, the other banks know what's going on, and then by the second or third application, they're either not going to approve us or approve us for way less than we would have got if they wouldn't have seen that previous inquiry with the other major bank. Now, a couple lessons to be learned here. First of all, this is why business credit is so important, because what you want to avoid is putting any unnecessary inquiries on your consumer credit report at all. Because when you have inquiries on your consumer credit report from major banks, Bank of America, Chase, Wells Fargo, you are way less inclined to get the financing you're trying to apply for with another source. Because again, they think you're out applying for multiple different types of financing at exactly the same time. That makes them insecure, makes them uncertain, and they don't want to approve you because they don't want to give you a credit card for $10K or a credit line for $100K if you're just going to another bank to get another $10 or $100K from them, okay? So credit card stacking is a way of ultimately bypassing these safeguards that banks have put in place. And it's being done by applying for a lot of different credit cards at exactly the same time, typically a max of about 5. So it's called stacking because you're stacking these credit cards. You're getting 1, 2, 3, 4, 5. But you're doing it within a way within the system where you're doing it so fast that the other banks don't recognize what is happening, and you don't see those denials or lower approvals because all the applications are going in at one time before one bank can recognize that something else is happening. Now, is this illegal or is it legal? It's 100% legal. I mean, you can apply for as many credit cards as you want to apply for, right? It's just a way of understanding the banking system, understanding that banks will see this as a deterrent, not approve you, and then overcoming that deterrent by just expediting the time frame you're applying for these credit cards. So that's ultimately what credit card stacking is. We're stacking and getting multiple approvals for credit cards, but we're doing it so fast that we're doing it in a way that the bank isn't going to deny us because they see we're out applying for credit at other banks, right? 100% legal, 100% aboard. There's nothing unethical about it. It's just a matter of understanding that banks see it as a determinant. They see these inquiries, and you're doing it in a way where you don't have all those inquiries at one time. And by the way, Mike is in the house from St. Louis. Mike, thank you very much for coming in. And Danelle is in the house as well. Necromancer Pupil confirms young MA New York rapper that the next Discovery Exploring is in the trunk. That sounds awesome. I'm not exactly sure how to decipher that, but it definitely sounds awesome. So thank you. Okay, so that is what we are doing. Now, why is credit card stacking beneficial? A lot of reasons. I'll give you one of the most important. Because when you're starting a business especially, loans and credit lines are very hard to get. Almost all loans and credit lines are going to want to see revenue verification to approve you. Even the easiest credit lines to get, Bluevine, Fundbox, they still want to see revenue verification in order to actually approve you. So when you're starting a business especially, and you're trying to go out there and get loans, you're trying to go out there and get credit lines, you're fighting an uphill battle. It's really tough to get that kind of money. Now, if you've already launched a business, you already know this. You probably already tried and you recognize that it's harder than you thought it was going to be. But when we talk about credit cards, they're the easiest form of capital for us to get. So in a lot of scenarios, credit cards are easier to get than anything else. And so when we're launching a business, especially, well, this kind of financing is really, really, really beneficial because we're able to get funding, sometimes upwards of $100,000 to $150,000 in funding as a brand new business, even when we can't get other kind of funding. Big benefit. The other benefit of credit card stacking is that it's no doc, meaning there's no documents needed to verify. There's no balance sheets. There's no P&Ls. There's no tax returns. Okay, so there's no documents required. So even if we don't have revenue, we're still able to get approved. We don't have to supply all these documents, so it's faster as well. The other benefit is that it's unsecured. So what that means is it means we don't have to provide collateral to secure the debt. Now, again, this is especially valuable in newer businesses because newer businesses don't have assets. We don't really have a lot of collateral yet. We don't have stocks. We don't have inventory. We don't have equipment and account receivables. We don't have what a lot of established businesses do. And this is why credit card stacking is really, a lot of people that get it are newer in business because of those reasons, because it's unsecured. You don't need collateral and you don't need to have cash flow verification, and you can get it as a brand new business. So this is a lot of the reasons that it's popular. Now, on the other side, another reasons that it's popular is because you get 0% on credit cards. You can't get a line of credit. You can't get a loan at 0%. They don't offer that. But you can get credit cards at 0% for 6 to 18 months. So if you're going to make a major acquisition, let's say you're a real estate investor and you want to buy a property, that's about as big of investment as you can get, right? So in that scenario, you could literally use credit card stacking to borrow the money for the initial purchase of the property. Let's say you're doing a fix and flip, and you could liquidate these kind of 0% cards and you could get the money at 0%. Or let's say that you're buying a piece of machinery for your business and you know it's going to take 2 months before you get an output of income that is created from this equipment you have to pay for. So you got to pay for the equipment, but then you got to wait months for it to produce revenue to pay for itself, right? 0% financing can help there. Let's say you got a marketing campaign. You're going to launch a Facebook ads campaign that you know is doing well, but it's going to take you 2 to 3 months to get your money. So now you need to spend as little as possible on those ads and then wait 3 months to get the return. Well, 0% can help there. So there's all these scenarios where 0% financing could be very beneficial for us, especially with major acquisitions. And by the way, Victor is in the house. I appreciate you coming in. Happy Tuesday as well. Safeway Solutions Services from Valdosta, Georgia. If you're just coming in, give me a shout out. Tell me your company name, and I am going to give you a shout out right here on the actual stream. Okay, so another reasons that credit card stacking is valuable, right? It's just basically easier to get. We don't need documents. We don't need collateral. It's 0%. And if you go through an outside company to be able to get credit card stacking done, then they can even take the cash out of those cards at 0%. So you can't beat having 50, 100, 150,000 in cash at 0% for 18 months, like a lot of benefits. But yet one other benefit is that credit cards typically have some kind of other promotional value to us than loans or credit lines do. Credit cards give us two times points on groceries and 3 times points on office supplies. And, some credit cards are eight times points on ride share. Sometimes with American Express and other ones, we get 1, 2, or even 3% cash back on every dollar that we spend. So there are all these extra benefits just for normal, ordinary day spending that we get with credit cards that we don't get with loans and we don't get with credit lines. So these are all the reasons that people really start to look at credit card stacking as a financial solution, because it has all of these benefits. It's easier to get. We can get it faster into the growth or into the startup of our business, or we can get it further down the road into the growth of our business when we need that 0%. We get these incentives, we're getting these rewards. There's all this. And then when we look at credit card stacking versus just credit cards, we can get a lot more money than we would typically get if we're out there just trying to apply for credit cards normally like we would. So this is a lot of the reasons that people want to actually get credit cards now and do credit card stacking. Now, here's the question. The question becomes, I'm trying to get my mouse to work here. The question becomes, what are the pros? What are the cons? We talked about some of the pros already about credit card stacking, right? So you're getting unsecured business funding. There's no collateral, right? We're able to get low interest or 0% interest during that intro period. We're able to get these rewards that we would normally get that we can't get on loans or credit lines. It's easier money to get. We can get it as a startup. Another thing about credit card stacking is that in the business world, it's harder to get credit cards than it is in the consumer world. You kind of have to have good credit. So most business credit cards are going to require like a 680 FICO score above. So to do a credit card stacking, you almost always have to have a 680 or 700 FICO score or higher in order to really be able to qualify for credit card stacking. But one of the benefits is that you can use a signer and not yourself. So let's say my credit's not good, but my dad's is. Well, then I can have my dad actually be the signer and he could get those credit cards under his name and it doesn't have to be under my name, right? And then a lot of them don't even show up on the personal credit reports. As a matter of fact, a lot of these credit cards report to the business credit reporting agencies. So I could get a signer to sign for me even if my credit's bad. By the way, half the people we help with this program use somebody else's credit. And then that signer isn't really impacted. They have inquiries on their credit report, but the credit cards in a lot of cases don't even report on their credit reports. As a matter of fact, when you get credit card stacking through an outside source, you can actually even choose whether or not you want personal cards, business cards, both. Like you get to choose where the cards that you're getting actually report to. You can either get more money and take consumer and commercial credit reporting cards, or you could just take less money and just get business credit reporting cards, but you can choose that. So now another benefit, right? Another pro is that we don't even have to have good credit. We can use somebody else's credit to be able to qualify. Now there are cons, right? And some of the cons is that you're basically managing multiple different credit cards, right? So you've got to keep track of these credit cards, the balances, when the payments are due. You've got to keep track of the promotional periods. You got to know that you can use this card for this and this card for this. And this one gets you 2 times points on rideshare and this one gets you 8. So there's more that you're going to have to manage because you're not getting it all from one source. You're getting it from multiple sources. So something to think about. Now, the benefit there is if multiple cards report to the business credit reporting agencies, you're also establishing multiple trade lines for your business. But you can consider it to be a con that you have to manage multiple different credit cards. Now, the other con to think about is that the interest rates are higher. Credit cards have higher interest rates after that 0% period expires than what we see with a lot of loans and credit lines. Not outrageously high. You're typically 12 to 18%, somewhere in that range, but they do have significantly higher rates than what you're actually going to find if you're out there going in and getting regular loans or credit lines. So, not as much. Depends on the loans or credit lines you get. You're going to get better terms on an SBA loan than this, but you're going to get worse terms on merchant cash advances, revenue lending, a lot of the other high dollar fintech stuff that's out there. But rates can be kind of high. And credit cards, once that 0% interest rate expires. The other thing is that, there's fees involved, right? So if you miss payments, you're going to have late fees associated with that as well. Pretty common with any kind of financing. but more common with credit cards, even if you're 1 day late. And if you are providing personal guarantees, which in the beginning with credit card stacking, you almost always are, well, then you're personally liable for that debt, or your signer is personally liable for the debt. So there's other financing where you have some kind of collateral that you don't have to provide a personal guarantee. Or you could go get corporate credit cards for your business, which we talk about all the time, and those don't require a personal guarantee. But these kind of credit cards in almost all cases require personal guarantees. So there's personal liability at exactly the same time. So now we've talked about some of the goods. We talked about some of the bads. The question is this legit? Is it a scam? Is it not a scam? It's definitely not a scam. Credit card stacking is a real thing. It is a real method to be able to get the financing you need. And by the way, stacking is a great way to fund a business and fund even yourself personally. It doesn't just have to stop at credit cards. So there's a lot of loan stacking we do as well, where you're getting multiple different kind of loans, business or personal or both, and you're stacking those to get higher approvals as well. So inherently, no, it's not a scam. It's 100% legitimate. All you're doing is getting credit cards like you normally would. You're just applying for them in a quick succession. So as a result of that, you get way more approvals. The key is to know the difference between the sources that you're out there looking at and determine if you're going to do this on your own or you're not. So how do you determine that? Well, if you use a credit card stacking company, and there's plenty of them out there, right? So we talk about Fund and Grow. Seed Capital was around for a while. We look at Seed Capital. They used to be around as well. So there's plenty of them out there. Capital Funding. There's all kinds of companies out there, big and small, that do this. The one thing to keep in mind is that a lot of these companies charge about 10% for them to do it for you. So what they're going to do is they're going to do all the credit card applications on your behalf. They're going to choose the cards. They're going to do the process. A lot of times they'll even call the underwriters themselves to get the approvals increased. So you can definitely hire a company to do it. You're going to pay about 10% of whatever they collect to typically get it done. Now, is it worth the 10%? Short answer, depends on you, right? You're ultimately going to get way more funding using another outside company than you would on your own. Bottom line, you're going to get better cards and more funding with working with somebody else than you get on your own. By the way, I do it myself. When I'm going to get credit cards through the same method, I pay a company, even though they'll do it for me for free because we send them so much business. I still pay them because it's worth the value to be able to get this done. As a matter of fact, the main business credit card I carry in my wallet is a credit card that comes from credit card stacking. So you can pay a company to do it. You're going to pay 10%. You don't have to pay up front. They roll it in. So they go get your cards. You get the cards that you got, and then you use one or multiple of those cards to pay the fee. So it's rolled in like an SBA loan, but you're going to pay about 10% to get it. Or you could do it on your own. Now, a lot of pitfalls, like anything in this world, and doing it on your own, right? You're going to have to get a pretty good idea of credit cards. All the credit cards are out there, the different requirements for approval. You're going to want to know what credit bureau they pull from and look at your own credit and figure out what bureaus are best. You're going to have to spread out those applications. You're going to make sure that you might have one or two that pull from Equifax and 1-2 pull from TransUnion and 1-2 pull from Experian. So you're going to kind of mix that up to make sure the inquiries really aren't a problem. So you're only putting inquiry on one bureau versus the other. So there's a lot of research. I mean, it's just the way it is. You're going to have to look at credit cards, know what it takes to get approved, know which bureau they're actually pulling from for the decision. And then you're going to have to kind of put all this information together to develop a strategy to apply for them all at one time, right? And that's not an easy thing to do. It just takes a little bit of work. So you could definitely do it on your own. You won't get as much money. You won't get the cards with this, business credit cards that report to business credit reporting agencies are harder to find. So you're not going to get a lot of that. You probably won't get the most rewards points or longest 0% APR period. When you hire a company, that's like what they do, right? Like what they do is know all that stuff. And that's what you're paying them that 10% for. So you can absolutely do this on your own. Okay. As a matter of fact, I have trainings on YouTube, youtube.com/credit suite. And I have trainings that teach you exactly how to do credit card stacking. I break it down. If you follow me on TikTok at Business Credit, pretty simple. I'm at Business Credit on TikTok. I've got training videos right there that show you which bureau, which credit cards pull from Equifax only, TransUnion only, Experian only. You can go to FICO Forums. FICO Forums is a great place to get these kind of details as well. There are places you can get that information that's out there that you can start doing research and start putting together a strategy to do this on your own. And just keep in mind, you get better results if you use somebody else, but you can definitely do it on your own. The other thing to keep in mind is that inquiries matter on this. So you really don't want to have more than 6 inquiries to successfully do credit card stacking over the last 6 months. So if you fail and you don't get as much as you wanted to get as you could have with somebody else, you got to keep in mind you're putting yourself out for about 6 months before you're going to try again. So some things to think about. Once you're in, make sure you know what you're doing, because you got 6 months before you're realistically going to be able to take this on and try this again. So some things to think about there as well. But that being said, what are some of the best tips? Well, find a trusted professional. It depends on you. I hire people to do just about anything. I'm in the funding space. I've been here for 20 years. I've been in the business credit, business funding space for well over a decade. I still hire somebody. I'm the business credit guy. I still hire somebody to do credit card stacking for me. I do personally, because I see the difference between doing it on my own and doing it with somebody else. And again, you want to avoid scams and complexities. Just simple. If you're going to hire another company, do some due diligence research to make sure they're a legitimate company, right? Look at their reviews, look at their feedback, look at what other people are saying about them. You want to do some due diligence before you choose the right company. If you're going to do it on your own, you need to stay organized. It's going to require a lot of research. You're going to have an Excel type log, and you're going to have to map out all the different cards that you're going to need to know so you can choose the best ones to actually apply for. Because again, everybody's different. If I tell you the 5 cards that worked for me, I guarantee 4 of those are not going to be the best for you. And so you can't go to FICO forums and all these places and just hear what somebody said that they got and do the same thing. You really have to find what's better for your own individual situation as well. You also want to use these funds strategically. You're not going to want to go get credit card stacking just to get credit card stacking. Usually you're going to want to go do this when you know you're going to use the money for something particular, right? So if I'm going to get 0% for 18 months, I want to wait till there's something I want to buy, whether I'm just launching a business, that might be it, or I need something I'm going to spend the money on that I need that 0% APR period. You're going to want to time it right, where you're taking the max benefit of that 0% period by only basically applying for these cards when you know you're going to use them for something. Otherwise, it doesn't make sense to pay the fee and then to start paying on the cards and the fee that you had, and then use the 0% period if you're not using it for something in particular. And the other really thing to think about here is that this is a short-term solution. It's another con. It's not a long-term solution. Like if you're trying to get money for a fix and flip, it works great. If you're trying to get money for a property you're going to buy and hold, and you're going to keep the property using this, it's not as much, because after that 0%, you're going to start to pay payments on that, right? So it's the other thing too. This isn't a long-term funding solution. It's a short-term funding solution. It's good for bridging the gap of where you are now, where you're trying to get to, but it's definitely not long-term funding. For long-term funding, we want credit lines that take a longer period of time that need to be paid back. We want loans with longer terms to pay them back. Those are better for us for long-term funding opportunities, but this works good for us for short-term solutions. So some things to think about there as well. So that being said, I'm going to go ahead and wrap up. That's credit card funding. That is exactly what you need to know about credit card stacking. And now you have enough information to really see, is this a good fit for your business? Now, if you want us to introduce a credit card stacking company to you, we absolutely can. We work with all of the ones in the actual space. So you can definitely come on. Let me see if I can pull something up here real quick. You can definitely scan this QR code or go to creditsuite.com/CLH and apply for you or a signer that has a 680 FICO score. And we're not going to charge you a dime of money to help you. We will get you to a funding source that in the credit card stacking space that's the best for your scenario, that will get you the most amount of money. Typically, you're able to get a same day pre-approval to know how much money you can get. And then usually with this kind of program, you can get your money in about 2 to 3 weeks. If you decide you don't want to work with an outside company, then check us out on YouTube, youtube.com/Credit Suite. Check me out on TikTok @Business Credit. And then from those 2 places, you're able to get all kinds of training I have on credit card stacking, which credit card issuers pull from which bureau, all the information you'll need to know to start accumulating the knowledge you're going to need to do this on your own. So I've given you a path either way. Whether you want to go a paid path or the free path, now you have a couple different options that can get you there. So if you got value from this training, make sure you like and subscribe. And then make sure you keep your eye out for our next training, because we're always talking about the coolest things you need to know to help you get the money to start